own your first property with no money down. We're going to show you how right here, right now. Here we go. By the end of this video, you'll know how to buy your first home. I'm going to show you step by step, move by move, ABC 1, 2, 3, how it's done. Watch each step, and in the end, you will get the keys in your hand. Step 1, go to a major lender or the bank like Wells Fargo, Chase, Bank of America, and find out how much you qualify for an FHA or Federal Housing Authority loan. Those require 3.5% down. We'll talk about the 3.5% in a minute, but that gives you the most leverage or the most loan towards the purchase price of the house. While you're there, ask the bank what grants are available for first-time or new home buyers and how you can get those grants. These are commonly available and oftentimes are called down payment assistance programs. So ask about those and they will be aware of them. You apply for these grants, it's based on your income. You'll need to give them some documentation, but the lender at the bank will help you to do that. So they will show you the grants and how to get them. Once you're pre-qualified with a bank with an FHA loan and you've applied for a grant, the next step is to find out what's available in your market in the price range that you are pre-qualified for. Typically, the bank will give you a pre-qualification letter, and that pre-qualification letter will be used in order for you to write an offer. I recommend you buy new or mostly new homes for your first property because maintenance and fixing and renovating property is a world of its own. So if you're a newbie investor or you're trying to buy your first home, no money down, I recommend you buy a new or mostly new home, mostly new being less than 10 to 15 years old, mostly new, that doesn't need a lot of work and is in pretty good condition. When you go in the new home subdivisions, they will have you pre-qualify as well, so they can also help you and be aware of grants or other government programs to help you get started. In addition to grants, you may also be able to get a gift letter from a relative. A gift letter means that the relative or friend or family related person is going to give you the money for the down payment and you don't have to pay it back. So remember, 3.5% of even a $300,000 home is only $10,500. You can get multiple gift letters. It doesn't have to be from one person. You may be able to get one from your uncle and say one from your parents, and that may help you to get into your first home. My father and my mother helped a couple of my siblings get into their first home as well, and it is commonly done with terms like a gift letter or with a grant for many people. Your next step is you want to write an offer on a property that you like, that you found. The biggest challenge I see for most people is they don't write offers. Just because you write an offer doesn't mean you have to buy it. You still have an opportunity to inspect it, to look at it. You're going to have contingencies, which means things that have to happen for you in order to be obligated to the contract. So one of those contingencies may be a thing like an appraisal. Does the property appraise for the purchase price you're paying? In a way, that protects you so you're not overpaying. Another one is an inspection contingency. If you're buying a used home, if there's any issues, then you may be able to renegotiate those issues or get the seller to fix those for you. Maybe something's wrong with an appliance, or maybe there's a problem with plumbing, or maybe there's a window or some damage to the flooring, etc., or something wrong with the roof. You can get those inspected, get a cost of repair, and those sometimes can be negotiated to be repaired in the escrow prior to you closing, so that you have a home that you don't have to worry about fixing up after you close. Once you get an offer accepted, they will ask, of course, for your pre-qual letter in order to write the offer. You'll then go to the bank and they'll give you documents to fill out. One of those forms is called a 1003. This is a form which is a loan application form. It's 4 pages long, and it asks basic information about your income, your debts, your assets, how much cash you have in the bank, what you have in reserves, how much you have in your life insurance policy, what's its worth, what is its cash value, what's the value of your 401k, and other financial assets like your belongings, cars. What are they worth? What do you owe? In other words, what are your assets? What do you own that has value? And what is your debts? Who do you owe, and how much do you owe them, and what's the payment? They'll ask you questions like, are you a U.S. citizen or not? Have you ever filed bankruptcy or not? Have you ever had a foreclosure or not? Et cetera, et cetera. There's a number of different questions they ask you. Regardless of the answer, you may or may not be qualified. It depends Obviously, some people who are, for example, financially went through some challenging times, like a bankruptcy, may be eligible for a new loan after a few years. So again, it's important that you trust the process, okay? Go in there, find out what you need to do. Even if it's a no today, that's not a no forever. It's important that you work through the process so that you can get yourself into a property. The next step in this process, of course, is to go through the application process and get your loan approved. Once your loan is approved, then you will go to escrow with documents to sign for your loan. Your difference for your down payment, it could either be cash from you, or it could be a gift letter, or it could be a grant, right? We're talking about no money down for your first property, so a grant or a gift letter typically. What it can't be is from the seller. The seller can't give you the down payment. That's not allowed, okay? The other part of this is that you write your contract to have the seller pay your closing costs. So let's say, using my example, you're going to pay $300 for the home. You'll typically want the seller to pay 3% of your closing costs. So you might write it for $309 and ask for a 3% credit. Typically in appraisal, there's a little bit of leeway of a few percent, and oftentimes they'll be able to cover that extra money that the seller credits you in escrow to pay your closing costs. So besides the down payment, you're going to have closing costs. Those closing costs can be credited by the seller in the contract, and you would ask your realtor or the person writing it that you need a closing cost credit so that you have the funds credited so you don't have to come out of pocket with the money. Same if you're a veteran. Veterans have no money down loans available. You can do one, and if you get rid of that loan, you may do another one, but you can only have one at a time, as I understand it. Again, check with your mortgage broker, check with the bank. They're going to give you exactly what you need to do and how you need to do it. They'll take you through a process. If you're not ready, maybe in a few months or a year, whatever long it takes, you will be ready, and then you could get into your first property. As far as the gift letter, that may take some convincing, but the gift has to be a complete gift. It can't be paid back. So it's important that you realize that for you to be successful in real estate, you need a mentor. You need somebody to help you. So don't forget to subscribe down below so we can stay in communication. I make videos and put them out on a regular basis, usually daily, Monday through Friday. You'll see some new information from me about real estate. Information that I used to sell for as much as $5,000 for a seminar. So you're going to have this information, and you'll have things to help you like this so that you can be successful in owning your first home. And lastly, let me tell you a story. When I bought my first home, it was a condo, and my girlfriend and I, when I bought it, her father helped with a gift letter for the down payment to help me get the property. In other words, just like you, when I started out, before I owned millions in real estate, I didn't have a lot of money either, okay? So nobody starts usually with a bunch of money. We all just started, and that's the key. You got to start. The old saying, 1,000-mile journey starts with what? A single step, right? You got to start. You got to jump in the pool, okay? You got to go for it. You know, I used to be a chiropractor. I'm retired now. And when I was a doctor, people would come in all the time, and they would tell me everything that's wrong with them, and usually they were wrong. They said, well, I got this shoulder pain, but it's because, you know, I drive with my hand on the wheel like this. No, that's not what it's from. So the car accident 5 years ago where you damaged your neck, it's referring pain in your shoulder, okay? Quit trying to be the doctor, right? I would tell them. So in your case, quit trying to be the loan officer, quit trying to be the realtor, quit trying to be the lawyer, quit trying to be the accountant. The truth of the matter is you don't know what you can do until you go in and you talk to these people and find out what programs are available for you. And I implore you to do it. Take the step. It's not going to hurt you. They don't care if you don't qualify. It doesn't matter. You're on a path, okay? You're on a path. And so you want to get on the path. All right, you want to start. My father used to say, nothing comes to pass sitting on your ass. So you got to get up and do something, all right? I'm Paul Maguire. Don't forget to subscribe. And in the next video, I'm going to talk to you about something kind of fun. So my next video, how to find hot zip codes for real estate, will show you where you should probably buy.